Investors, welcome back to Green Money Momentum, where we talk about market movements, making money, and money momentum. I'm your host, Trevor, and we are here for the first daily talk of stock for the month of December. And the market's starting off red as we see 66% in the losing category and a lot of red on this heat map. But me personally, I am not concerned at all. And I just see a ton of buying opportunities. And I am expecting some huge things in the markets here very soon. We have been following the bigger storyline when it comes to the Federal Reserve. And later today, we do have Jerome Powell speaking late in the day at 8 p.m. And what I am expecting from this speech is for Jerome Powell to talk about the end of quantitative tightening. As we know, today is a very important day because at the last FOMC meeting, Jerome Powell did mention on December 1st that they would be ending the reduction of asset purchases, basically admitting that we are going into a much larger cycle of quantitative easing and they're going to be purchasing all the bonds once again. So I believe that the Fed has already shown their hands, and this is the cycle that we are about to see because the Fed cut in September, they cut in October. Today, we have the end of the reduction of asset purchases. And then we do have the next big FOMC meeting, which is in 9 days. So 8 days, 20 hours from as I record this video. Right now, there is an 87% projection that the Fed cuts at this meeting. And I do expect for them to do so because of everything they have already done with the cuts we saw in September and October. And I am expecting to see a bullish catalyst from Jerome Powell speaking tonight. But when it comes to the central banks, there was some fear, uncertainty, and doubt today, not around the United States central bank, but around the Japanese bank, as we saw today that the Japanese yen rebounded and government bond yields in Japan rose to their highest levels since 2008. And the Bank of Japan governor offered the clearest indication yet that an interest rate hike could be forthcoming. So while we are seeing quantitative easing here in the United States, there may be some quantitative tightening happening here in Japan in the very near future, which may not be the worst thing because if you know the history of Japan and what they do with monetary policy, they have been cutting forever. So the markets did experience some blood from this today. We saw cryptocurrency get hit. We did see both of the major indexes down, and we also did see a lot of stocks also in the red. But me personally, I am not too concerned. I am looking at what the United States Federal Reserve is about to do. And so when we do look at the major indexes, recently we have had this downtrend with some higher lows built, but most recently, as of last week, Thanksgiving week, we did see a pop above this trend. And then when we do look at the MACD on both of the major indexes, it does appear that we may be seeing a bullish cross as we speak currently. So the markets may be ripping very bullish here very soon, and many are hoping for the Santa Claus rally. I am right there with them, but even when the markets are bleeding and in the red, I am still very excited with what we are seeing, and I am not at all concerned with the blood. So again, on this channel, I've been talking about how I have been buying the dip. And so with that being said, we're going to talk about a bunch of different assets today. We're actually going to start out with Applied Digital, which we talked about for the first time most recently. I bought the dip on Applied Digital, and right now it is looking pretty nice as I bought at this spot right here as we were low on the relative strength index, and then as we were starting to see a bullish cross here on the MACD. So we haven't totally crossed. We are right at that spot right here. I do believe if we do get more bullish sentiment out of the markets, we will see a strong cross here, and we could see Applied Digital have a crazy rip up. When it comes to APLD, I originally missed this entire run up. So Applied Digital went all the way from being valued around $12 all the way up to the high 30s. During this entire rip up, I did not touch the stock at all, but I must admit, I was having some fear of missing out on this play. So with the recent retraction that we have seen, this to me is very appetizing, and I have picked up into some APLD, a lot of true intrinsic value with this play. In my opinion, the future is going to be all these data centers, technology, AI, robotics, and applied digital positioned perfectly for all of that. When we do look at the earnings of applied digital, also, acceleration in the growth with applied digital already. And again, this is so very early on to what the future is going to be 5 to 10 years from now. So applied digital right now looking very bullish, and their next quarter is expected to be their largest. This is going to be in 43 days in January. So I want to position myself now before the upcoming volatility, just like this next play, which is all around robotics. This is one of our top 3 plays for the month of December. When we talk about technical analysis on Rich Tech Robotics, we have been beat up pretty bad. We were valued all the way up to $7 plus at one point, but then with this recent sell-off, we saw a hard retraction in RR. We are now very low on the relative strength index, and also appearing to see a bullish cross on the MACD. Right now, a lot of plays are following this exact trend because of the blood we have seen in the markets, and I am expecting some very strong bullish reversals on a lot of plays. And when I like to invest personally, when I see the best opportunities, is moments like this where we could be seeing those bullish reversals. Again, so much of the market looking like we are about to see that. A lot of stocks have been unfairly beat up. It has just been a lot of liquidity issues with the banks, which the Federal Reserve, the biggest bank out of them all, is about to fix. And so all these companies, the underlying companies, are still doing fantastic. When it comes to earnings reports, so many of these companies are beating on earnings. And then when it comes to the macros of tariffs, inflation, and even the Federal Reserve, things are looking positive there also. And so same as applied digital, their earnings report is going to be in 43 days. And again, there is a lot of fear, uncertainty, and doubt in the markets right now. We are all the way in levels of extreme fear, but I am not at all concerned. YouTube right now is infested with the bears. The bears are always wishing for the economy to crash to absolutely nothing, but I believe that those bears are missing the bigger picture, which is that the government and the Federal Reserve always kicks the can down the road. They have really shown that since 2008. They showed that in 2020. And even though the economy is looking a bit shaky for some right now, there is a lot of pessimism in the air. We must remember that the stock market isn't the economy, and really the market pumps so much off of what the Federal Reserve is doing and all the liquidity that they are pumping into the markets. And so right now, with Rich Tech Robotics at just $3.38, I consider this to be a tremendous opportunity. When we talk about quantitative easing, this is going to be tremendous for all risk assets, and also Rich Tech Robotics positioning themselves perfectly for the future with all these robotics that are currently out in Vegas. So the next play that we're going to talk about here, Robinhood stock, which also got unfairly beaten up most recently. But again, this just presents tremendous buying opportunity as we have fallen significantly on the candlestick chart. Currently, we are right under the 50-day moving average. We are also decently low on the relative strength index. And then we are at our lowest point on the MACD that we have seen for the entire last year with Robinhood. So looking very undervalued on the MACD. I'm going to sound like a broken record here, but also appearing that we may be seeing a bullish cross. So I see a ton of buying opportunities in the markets right now. I am not at all fearful with what is going on. I am not listening to the bears. I am watching what the Federal Reserve is doing. And like I have been saying on this channel, I believe that soon the talk of the town is going to be to not fight the Fed. The Fed is our friend. The government and the Federal Reserve working together to make sure this market doesn't drop. Again, a lot of the bears talk about how we are in a stock market bubble, how we are in a housing bubble, all these different bubbles that we are in, and they are not totally wrong. We are in the everything bubble, but how did this bubble really start to get blown up in the first place? How did all the air enter the bubble? Well, it was from the Federal Reserve by making money so stimulative, by doing rate cuts and keeping this stock market floated up. And I do believe that they are going to continue to do that. The government's debt is never going to be paid off. So when some talk about the trillions of debt that the government is in, basically there are two routes that we could go. We could either start defaulting on all this debt, cause a true economic crisis, or the Fed could just cut more, which is exactly what they are going to do, at least in my opinion. But I would love to hear what everyone else thinks in the comment section below. So please drop a comment. Please let me know what you think of today's markets. If there are any stocks that you are currently looking at, also please leave a like and please subscribe to the channel if you haven't already done so. I thank you all so much as always, and I will see you in tomorrow's daily talk of stock.